Your Bitcoin is not safe. At least not on a centralized exchange. There has been a lot going on in the cryptocurrency exchange scene in the last week or so. I'm going to break down the top stories for you. And of course, the first one has to start off with QuadrigaCX, the Canadian exchange. $190 million in cryptocurrencies may be lost forever. Maybe. The owner of the exchange died while he was in India due to complications apparently from Crohn's disease, and he was the only person with access to the cold wallets. Wait, hold up. They didn't have a multi-signature wallet set up for $190 million worth of customers' cryptocurrency? That is insane and highly suspicious. 115,000 users are left without their money, and that is tragic. Some of these users had very large balances on the exchange, with one user apparently having up to $70 million worth of crypto on the exchange. That's mind-boggling if true. The exchange has now filed for bankruptcy. Now, the exchange has been granted an order for creditor protection in Nova Scotia. This is basically a 30-day stay of proceedings in a bid to stop any lawsuits from proceeding against the company at this point. And it's a tragic situation. Somebody dies, a company goes under, thousands of people lose their cryptocurrencies, and thousands of Bitcoin disappear forever, lost beneath the waves of the crypto markets. But then it starts to get weird, because the QuadrigaCX case has got a lot of strange things going on in the background. And a lot of the following of what I'm going to say is rumor and speculation. Some of it's unsubstantiated, so please keep that in mind. These are just the things that people are talking about right now when it comes down to what's going on with this exchange. The reality at the end, depending on what the investigation turns up, may prove to be different. Now, before the sudden death of Gerald Cotton, he was that one man who was the only person who knew the passwords for the cold wallets. Before his unexpected death, there were also quite a few reports of long delays in getting withdrawals. That in of itself is a bit of a red flag. There were, of course, accusations that basically you could only withdraw your money when somebody else deposited theirs, which means that there were serious solvency issues at the exchange, if, of course, that was true. The accounting of the exchange has been woefully bad. That in of itself is not a nail in the coffin, but maybe perhaps just bad business practices. But the company was also hit with a cease trade order for failing to file financial statements. Cotton's wife has also said that she has been unable to find any corporate records. Man, that sounds really, really dodgy, doesn't it? And that brings us to their cryptocurrency addresses, because it is unclear whether or not Quadriga actually had all of the cryptocurrencies that they say they do, which was millions in cryptocurrency at the time of its closure and at the time of Cotton's death. Why do we not know how much money they had? Well, because Quadriga never disclosed their cold storage wallet addresses. Seriously? That is insane. So much money, so much trust, one single point of failure. A lot of things don't add up here. Taylor Monahan of My Crypto has been out investigating the Ethereum side of this situation. She said that after looking around, that her assertion is that the company definitely didn't possess a significant amount of Ethereum to make it liquid, and that the cold storage Ethereum addresses may not have existed at all. Then there's the litecoin. While unconfirmed that these are Quadriga's addresses, research has indicated that Quadriga's Litecoin cold storage wallets are moving Litecoin after the claim that the keys were lost. Again, we cannot confirm that that is the company's Litecoin address or not, because they won't disclose that information, even now. Again, seems really, really dodgy. And it just keeps getting deeper. Farther and farther down the rabbit hole we go. The co-founder, Michael Patron, might actually be a famous con man going by the name of Omar Dahani. This is a convicted scammer. Dahani was a member of the Shadow Crew and pled guilty to numerous counts of identity fraud back in 2005. Now, he also used the name Omar Patron in a forfeiture case, and Omar Patron was also a name used to start a company called Midas Gold Exchange. Remember, these are the guys who have the KYC information for 100,000 plus users. They have, Michael at least, or whoever he might be, not Gerald Cotton necessarily, but he did work with this person. This was the co-founder of the exchange. So this proven identity scammer now has access to all this KYC information. It'd be so easy for them to go and open up new accounts in other exchanges, cashing out using fake IDs or, well, real IDs, but fake for them. Now, Michael Patron apparently left Quadriga back in 2016, but considering how fishy the rest of the story is, I would not be surprised if he maintained an influence or a relationship with Gerald Cotton. Then there's Gerald's death itself. Now, some have speculated that he did fake his own death and basically got a knock-off death certificate in India. Or worse, perhaps he was killed by his business partners. But even the death itself is incredibly suspicious. Dying from Crohn's disease, only 1.6% of sufferers from Crohn's disease die of it, and to die from Crohn's disease at such a young age is incredibly rare. So there's that. Cotton was cremated, and his ashes were dumped into a river in India. Well, that's very convenient, isn't it? You go to a country where it's really easy to get a fake death certificate, you die, you're cremated, and that's it. Just like that, you're gone. Officially, anyway. This reads like the script of some kind of Hollywood film. It's absolutely ridiculous. And to make it even better, he filed a will 12 days before his death. So many coincidences, it's crazy. And in that will, he accounted for things like his dogs to be taken care of and his house. But he casually forgot to include any information about how to release the $190 million in user funds on his exchange, which he had the sole access to. Oh, and by the way, Quadriga did not announce his death or the missing keys for a month. Wow, that sounds really, really bad, doesn't it? There are other links too that add to the general fishiness of this story, and that's Crypto Capital. They also work with companies like Exmo, CEX, which has been having withdrawal issues recently as well, Coinapult, which basically stopped business overall back on December 10th, and of course, everyone's favorite FUD exchange, Bitfinex. All of them have reported withdrawal issues in the recent past. In fact, Crypto Capital, on the day of the announcement about Quadriga, delisted Bitfinex from their website. Well, that is very, very interesting, isn't it? What particular timing? Very fascinating when it comes down to it. When are we going to get over Bitfinex FUD? It just keeps coming. Never goes away. Bitfinex! Bitfinex, prove your solvency at some point. Man, is it really that hard? But at least we can see, of course, that Bitfinex does have public addresses. We do know that Bitfinex has, millions in Bitcoin and millions in Ethereum because we know what Bitfinex's public addresses are. But it just adds to the general fishiness of this whole story. So I'm not saying that Bitfinex is insolvent, but to see these kind of shady relationships just adds a whole nother level of WTF is going on here. And why fake your own death anyway? Well, assuming that this is not the what really happened, that he perhaps did fake his own death. Well, to avoid jail, of course. Live on a beach in India in a sweet pad with all of your money that you stole from your customers. Not bad. But why? Well, there's lots of reasons. Maybe he got in with gambling user funds, taking your Bitcoin and your Ethereum and investing in ICOs, or God knows what else. Maybe he got hacked. Maybe there was a ransom event where they kidnapped his wife and said, hey, give us the money or, bad things are going to happen. Possible. Maybe he just blew it all on sweet amusement park rides. I mean, hey, who doesn't love a good roller coaster, right? Everything is on the table here when it comes down to it. If, it's a really big if he did fake his own death. A court-ordered lawyer will be getting a hold of the encrypted laptop from Quadriga, and that laptop might actually provide access to the $190 million worth of customer funds. An independent third party is the one who will be taking over custody of that during the bankruptcy procedures. Now, this story is not as crippling as something like Mt. Gox when it happened. We've moved a lot. The industry has grown a lot. The market cap has grown a lot. The amount of Bitcoin on Quadriga, it's terrible for anyone who had their money on that exchange. But for the whole economy, it doesn't bring the entire crypto economy down. It's just a tragedy for a few unfortunate users, and it sucks. It really does. There's nothing I can say that's going to erase the pain of losing your money to this kind of situation. But if the worst rumors prove to be true, that's something totally different. And hey, look, maybe the official story is exactly what happened. And it's all just a case of miraculous coincidences about Dahani and faking his death and the cremation of the body. It's all just a bit weird, but it's exactly what happens. I mean, that does happen. These things do happen in real life, and I feel like people are out there looking for answers to say, yes, this was a scam, because if it is a scam and the scammers get caught, well, then maybe some people will get a bit of their money back, right? Assuming that the lawyers can't get it out of the laptop. So maybe there's some hope out there for people. Maybe this guy just died and had incredibly bad security practices for his exchange. No matter what happens, it's not a good look for crypto either way. Situation one, crazy scam, Hollywood level kind of stuff. Bad look for crypto. Situation two, insanely bad security practices, very low transparency in terms of hiding the cold wallet addresses and having one single point of failure. Neither thing is good. So this situation has bad written all over it, unfortunately. And hey, look, that's just our first story, guys. I got other things to tell you about in terms of cryptocurrency exchange news. Next up is Cryptopia. Long maligned for having basically a terrible user experience and generally considered to be one of the more rubbish exchanges, as we all probably know by this time, got hacked last month. Now, locally, there are accusations that the New Zealand police and New Zealand regulators have not really been able to handle this cyber theft very well, and the community here and globally has been very frustrated by a complete lack of communication and a complete lack of transparency from Cryptopia. One of the New Zealand-based directors, Dawson, came out and said, our team is giving police technical assistance and their advice is to maintain radio silence in case we inadvertently say something that might interrupt their investigation. So there is that, and that's what I thought would be the case, is that the investigation is ongoing. They can't really comment on it, not at this point anyway. But man, that closed lips approach totally sucks for anybody who lost their money on Cryptopia, to have no interaction with these exchanges, zero accountability. They don't have to email you back. They just don't really care at the end of the day, and they should care. We should have transparency in cryptocurrency exchanges. But these exchanges have largely operated in complete darkness, in a complete opaque lack of transparency, and they've thrived there. They've made millions of dollars there. But it's not the way we need to continue into the future. Now, there have been some reports that Cryptopia will be opening back up for business. These have been refuted in an official police response, saying that there has not been any indication of when it might restart business. But it will probably restart business at some point. And that begs the question, if Cryptopia started up again, why would anyone use it? I mean, no, seriously, there are so many other cryptocurrency exchanges out there. Look at the bad security practices Cryptopia had. Look at the terrible communication that they had, the terrible user experience. I understand why some people used it in the first place. They had some coins that were hard to find in some exchanges and all that stuff, but yo, it's not worth it. It's not worth it. Look what happened. Bad exchange, bad security practices, bad communication. If Cryptopia goes bankrupt and disappears, it'd be better for anyone. Hey, look, they lost their money already anyway. It's gone. Money's gone. So I would not be surprised to see a bankruptcy declared for Cryptopia. And if they do come back, goodness gracious, guys, do not use Cryptopia. They've proven themselves to be incapable of managing your money. The SEC over in the United States is trying to figure out how to read blockchain data more easily. In addition to doing things like tracking data on coins with the highest transaction volumes, the SEC is also going to be looking into the universe of available information and transaction details. They want to improve things like monitoring risk, improving compliance, and inform commission policy with respect to all digital assets. And most concerningly, I think to us, probe details of a wallet address, including identifying the owner. So there's that. It's not all bad news, though, in the crypto exchange space. We did, for example, see Bison come out. This is Germany's first cryptocurrency trading app, fully backed by a traditional securities exchange. This is, of course, by Börse Stuttgart. Now, trading on Bison is only available between 6 a.m. and 12 a.m. Central European time because, traditional exchanges, but 7 days a week anyway. Not quite up to that 24-hour-a-day expectation that a lot of us have in the crypto space yet, but they do promise to have that coming out at some point in the future. The guys over at Gemini have announced that they have completed their SOC 2 Type 1 examination. Yeah, SOC 2 Type 1. Better than Type 2, no. Now, the plan here is to obtain basically more security credentials for Gemini. SOC 2 reports are essentially certifications testifying that they have good processes for integrity and security. So really focused on the confidentiality for end users. So basically saying that they're highly compliant, highly secure, and that they're ticking all the boxes. This certification means that it's now the first cryptocurrency exchange in the world to demonstrate that level of security compliance in protecting user data and customer funds. And wow, doesn't that seem so attractive compared to the previous couple of stories about Cryptopia and Quadriga? Here's a company that is trying so hard to be compliant and to have really robust security practices. It is in total night and day to what we see with Cryptopia and Quadriga. Now, compliance does come with its own problems. There have been some reports from OTC traders that are trying to redeem their Gemini dollars. So those are the GUSD tokens. Reports have been that accounts are being shut down and requests are being denied. One OTC user said that so many players are unable to redeem their GUSD, even very big OTC desks. Having an account doesn't guarantee redeemability. That is very problematic for a stablecoin without a doubt. In response to all this, Gemini said, Gemini is a New York trust company. As a result, some potential customers will be unable or unwilling to pass our robust compliance program. This is a feature, not a bug, and what makes Gemini different. We understand this may frustrate some, but this is necessary to build trust in the future of money. The company so far has redeemed more than $133 million worth of GUSD, or over half of the supply which was created. Some customers redeeming up to $40 million at a time. Compliance is a double-edged sword. There's no ifs, ands, or buts about it. Compliance sucks on one hand, but then regulations and compliance on the other hand stop things like Quadriga from happening. Hopefully, anyway, in the future, we can see those situations not happen. Here in New Zealand, we've been very lax with our cryptocurrency regulations. Regulators are so far behind. It's honestly a bit disappointing because we could be leaders like Malta and Switzerland and Japan are being leaders, but we're totally lacking behind. Cryptopia being a New Zealand-based and regulated exchange didn't have a lot of regulations or oversight happening on it, unfortunately. Kraken, making a very big and interesting purchase, they have bought a company called Crypto Facilities. Now, Crypto Facilities offers individuals and institutions transparent, secure, 24/7 trading on a range of cryptocurrency derivatives. They have been a pioneer in the industry, listing, for example, the first futures for Bitcoin, Ethereum, XRP, Litecoin, and Bitcoin Cash. It's also a leader in the cryptocurrency index offerings. This acquisition puts Kraken right at the forefront of offering advanced cryptocurrency products, and it's generally pretty awesome. Then we can bring in, of course, Binance. Binance recently launched Binance Jersey. This lets people invest in Bitcoin or Ethereum using pounds or euros. They also launched credit card and debit card purchases for the Binance main exchange. It's got a few percentage points on the fees for that, but it's an amazing service to be offered on the main exchange, which has had people basically calling out for so long, we need ways to get fiat in. And this is a way, even if you have to pay a few percentage points in fees. They've also launched an OTC desk. So for anybody looking to trade 20 Bitcoin and up, Binance is there for you with their OTC desk. And that is likely to be incredibly lucrative because we saw last year, for example, the Circle OTC desk. They handled payments worth of $24 billion. Wow. That's a lot of crypto, without a doubt. Remember with exchanges, guys, centralized exchanges, it's a place to go and buy cryptocurrency, and then you take it out and you store it somewhere safe. It is not a bank. You get in and you get out. They don't have accountability. They have very little transparency. It is a marketplace. You wouldn't leave your wallet sitting in the middle of a busy marketplace and then walk away, would you? So why do you do that on a digital exchange? I know it's easy. You have your password and your login ID, and it feels safer, more familiar than using a Bitcoin wallet with your private key. But it's not. We see what happens. The companies get hacked. They have bad security practices, total lack of transparency. They go bankrupt. Personally, I don't keep any of my money on exchanges as a place to store money. I do run trades on exchanges, so I've got a very small percentage of my overall crypto portfolio on an exchange where I run trades, I take the profits, I move them off, maybe I run another trade, maybe I don't. If I'm not running any trades, I don't keep the money on there. But I am currently in a few different trades, so those are open and on exchanges, but it's a very small percentage of the portfolio. Please understand that risk, that if you are going to be running trades, you're exposing yourself to these kind of situations happening. And we cannot see DEXs come soon enough. The big problem right now is that decentralized exchanges have terrible volume because none of us are using them, but they are the solution to so many of these centralized problems. Kyber Network is amazing, so easy, so intuitive. IDEX is great. Lots of great gems over there, coins that you're not going to find in many other places. Switcheo, easy, intuitive. We have the Waves DEX, which has a wider range of cryptocurrencies. You can change from, Bitcoin to Zcash and Waves. So there's lots of options out there, but you have to use them. You have to use them. We all say, oh, but why aren't the DEXs getting more volume? Because not a lot of people are using them. That's straight up. And they're really easy, they're fun, and they're much, much safer than using a centralized exchange because you're in control of your private keys at all times. Anyway, just my 2 Soshis on what has been going on with exchanges recently. I know it's a bit of a long video, guys, but I hope you appreciated all of the information. I'd love to know your thoughts down below about Quadriga. Do you think this is an exit scam, or is this all just some magical coincidence? I'd love to know your thoughts on it, or any other stories that I've covered here in the comment section down below. Thank you so much for watching today's video. You guys are super awesome, and I really, really appreciate you taking the time to come over here and watch this video. If you did enjoy the video, leave a thumbs up on it. If you're new around here, subscribe to the channel, and of course, you can always hit that notification bell down below to stay up to date when I put out a new video. Long live the blockchain, and peace out till next time.